The impact of Trump's Vietnam trade agreement. Reactions from retailers and consumers. A worker carefully packages clothing items at a garment factory in Binh Thuan Province, Ho Chi Minh City, Vietnam. Image credit, Lin Pham, Bloomberg, Getty Images. A mixed response from the retail sector over Vietnam tariffs. The retail world found some relief with a recent trade deal involving Vietnam, suggesting that fears of high tariffs might be behind them. However, some industry leaders remain skeptical about the trade agreement's benefits, expressing concerns about its potential negative effects on consumer behavior. One prominent retail CEO shared with CNBC that the trade news seems significantly better than the situation faced back in April. President Donald Trump announced that the tariffs on Vietnamese imports would be set at 20%, a substantial drop from the 46% rate initially proposed earlier this year, which had then been put on hold. Though this new tariff rate is higher than the current 10% duty, it avoids the extreme proposed rate that had retail executives worried. While it's not the best news we could hope for, it's definitely better than what we had in April, noted another executive. Some even argued that this adjustment allowed for a more optimistic outlook for the industry, though they still kept a watchful eye on potential developments. But here's where it gets interesting. Trump's declaration came right before the expiration of a 90-day pause on the previous high tariffs, putting pressure on the administration to finalize agreements with various trading partners. While the details regarding the start date and the final agreed tariff rates remain unspecified, such uncertainty leaves the industry in a state of cautious anticipation. Vietnam's growing role in the U.S. supply chain. Vietnam has become a critical player in the U.S. supply chain for footwear, apparel, and accessories. The American Apparel and Footwear Association reports that it now ranks as the second largest supplier of these products to the United States, and it is poised to become the leading supplier by 2025. For American retailers like Gap, American Eagle, and Nike, they have progressively shifted their manufacturing operations away from China to reduce their exposure to high tariffs and regional political instability. Vietnam's factories, some operated by Chinese firms, have been crucial in maintaining competitive production costs and quality similar to China. Additionally, many retailers have explored production options in other Southeast Asian nations like Cambodia, Bangladesh, and Malaysia, with tariffs primarily at 10% at present. If Trump's original tariff plan had been implemented, it would have undermined a decade of strategic movement away from China. Where does this leave the consumer? Sonia Lipinski from Alex Partners notes that the 20% tariff is a modest relief, providing a glimmer of positivity in a challenging environment. Nevertheless, it raises significant questions about how companies, including major players like Nike, plan to absorb or pass on these additional costs to consumers. Paul Cazzaro, CEO of Picnic Time, highlights a key point. Even a reduction from 46% to 20% tariffs still means higher prices are ultimately passed on to consumers. As Cassari puts it, it's more money out of consumers' pockets and less disposable income for other purchases. What do you think about the trade deal's effects? Are these tariffs a necessary move to protect domestic industries, or are they disproportionately impacting everyday consumers? Share your thoughts in the comments.